Hey, what's going on, guys? Welcome to another episode of a market review on markets such as the dollar index, S&P, Nasdaq, EU, and GU, where I'm doing some technical analysis as well as reviewing some trade setups using ICT's trading concepts and using his fair value gap strategy looking for trade setups. So let's jump right in. So today we had some high impact news at 8:30 New York time and 10 a.m. New York time. And there was a lot of anticipation for this 10 a.m. where Jerome Powell was speaking and giving a economic outlook. So a lot of volatility was to be expected, and we definitely got some volatility. So if we just have a look at the daily chart of S&P, we can see a lot of bearish action today, just steamrolling. The price is just steamrolling its way through sell side liquidity and looking to take out this sell side here at around 4080. But let's review the price action of today and this morning. I actually was looking for short setups. However, as I'm demo trading at the moment, I took a short setup, took a short trade, but it hit my stop loss. So I'm just going to review that quickly, and walk through where I went wrong and what I could have done to avoid the loss. So we can see this price action here. We can see a fair value gap that was created from yesterday, and during the night, price action dropped into that fair value gap and then moved up to um, take out a bunch of resting liquidity, so these relative equal lows at around 4,200. And at that moment in time, when I was watching that price action, um, that is where I decided that my trade setup took place. So what happened was, if I drop into the 5 minute time frame, yeah, we can see the resting liquidity here, and this candle, when I saw this candle spike up and come back down, that was me taking that as the liquidity grab. So what I started doing at that moment in time, if we drop down to a lower time frame, so if we look at it on the minute time frame, we can see things a little bit more clearly. So ignore ignore this price action for now. So I'll review that in a second. But when I was watching this price action and looked and decided, yep, I'm looking for a short here. So we saw this liquidity grab and saw the price drop back down, retrace, and then drop back down, create this displacement, create a fair value gap. And when the price was around at this level, around 8:47 a.m., I decided to set up a short limit order on this fair value gap, where my entry was on this level at that candle high, and my stop loss at this swing high. So I was there thinking, okay, price has performed this action here. It's created a setup for me. On the 15 minutes, tapped. Well, it's to fill the fair value gap. Has it filled it? Yep, filled the fair value gap. We saw an energetic move upwards, a liquidity sweep, and then displacement to the downside, resulting in a market structure shift here. And in parallel, created this fair value gap, and that's where I decided to take my create my sell limit order. I mean, in theory, that sounds like it was a potential setup. However, looking back at it now, I think it was a little bit silly of me to be setting up a trade at 8:47 where we had high impact news at 8:30, and then we was also going into even more high impact news at 10 a.m. Looking back at it now, I guess I kind of rushed it. I was hunting for a trade um, rather than, sitting back and waiting for the trade to come to me. One thing I also missed out on was, although there's a liquidity grab here, one thing I failed to highlight to myself was that just above that resting liquidity at this level, there were some relative equal highs here, with the liquidity resting above that. So what I probably should have done, instead of taking my trade, I should have waited as we approach the 10 a.m. news announcement and see what price does, because very easily, it could have shot up to take these out and then continue with whatever it wants to do. And that's exactly what happened. So what you can see here is, if we zoom back in, here is where I got stopped out. But if I'd have waited, so let me just remove this markup. So we've got the liquidity grab there. We also had a liquidity grab here, which was that higher level liquidity. We saw price rally above the New York opening price, the midnight opening price. And then we saw quite an energetic move towards the downside. So if we just shift to the 5-minute time frame where we saw the setup take place, we saw the liquidity sweep rally above the midnight opening, and then a energetic displacement to the downside. And what you can see here with that move down, there was this fair value gap that was created up here. And what did we see? At 10 minutes past 10 a.m., we saw price retrace, and so the algorithm priced back into that fair value gap, and then that was it. The rest was history, and the price just crumbled and has been crumbling ever since. So that would have been a great entry in hindsight. And I believe that ICT also tweeted that setup, that exact setup as well. Not sure if he took it or not, but he identified that. And in hindsight, I saw this opportunity as well. So one thing I've started doing now, as of today, is not something I was doing. It's not something I was doing before, but I've always had it in the back of my mind. Was to set up a trading journal, not for the charts, because that's something I am already recording, but more from a psychological perspective, to record my emotions before and after any trades that I take, as well as whilst I'm sitting there at my laptop watching the market session. So one thing I want to start doing is recording my feelings, and then if I can then build up history of my emotions on each trading day, and then be in a position where I can review trades that I've taken, whether they're wins or losses, and compare my emotions for that day. I want to try and build some kind of data setup, so that just something to refer back to and see when I perform at my best, when it comes to handling my emotions. So something I'm going to start doing today, and what I've written in there, how I kind of rushed it this morning. it's quite easily to mentally take notes. So, if you have a losing trade yesterday, and after that losing trade, you say to yourself, okay, not going to do this again. What's going to happen? You probably will do it again because you're not actually externalizing that experience. And one thing I've noticed, writing it, you are putting it on paper, you're putting it out on ink, you are actually creating something physical out of that emotion. So it definitely does help. I can, attest to that. So yeah, that's kind of the highlight of the trade setup on S&P, and we can see, it smashed through the draw on liquidity at these levels. It's very, it's very strong. Um, And if we just take a look at the price action at around lunch today, not much retracement. It's just constant. It's just crumbling, really, really weak, not giving anyone the opportunity to enter. Okay, so that's that. And then also I tweeted about this potential trade opportunity actually on Euro USD. This morning I actually saw a really nice long opportunity that I was waiting to enter. I actually reviewed the setup and actually had a buy limit um, set up, but unfortunately the price didn't really price back into my entry, and the trade took off without me, which is fine. So I'm just going to quickly review what I saw. So what I saw was the setup took place on the actually on the hourly time frame. So what we can see here is that yesterday at 12 p.m. in the afternoon, the low of the day was created at this level. And this morning, at the start of the London trading session, we saw price retrace and sweep that candle low, take that liquidity. And then what we saw then was price move to the upside, creating displacement, creating a market structure shift here, taking out this swing high, and in its path, creating this fair value gap between these two candles. So I saw that as a potential trade opportunity if price dropped back down into my fair value gap. And then my targets would have been initially taken out the high of yesterday. So what I did was I drew a fib to get my equilibrium point. So what I did was from this slow to this swing high, I was looking for the equilibrium, which is at this point here, waiting for price to offer a discount as part of the retracement, allowing me to look at entering there and then long into this level, and then potentially take profits at this level of the fib as well, and delivered that really nicely, but I missed out by literally a few points there. So I was a little bit not disappointed. I was a little bit. I didn't really feel anything actually, which I think is a good thing. But one of the reasons for that is probably because I am demo trading still at the moment. So um, even though people say that you should start demo trading, you should start with demo trading to control your emotions. But in this scenario, I am trying to treat my demo trading experience as a live trading experience, so that when it comes to live trading, hopefully, um, I'm kind of immune to the emotions. That's what how I'm trying to play it. But in this specific scenario, I didn't feel anything, which was good. But I'm asking myself, if I was live trading and in hindsight it hit my target, which would have offered me, wow, a 5 to 1. Didn't even, at this level. But if we, be realistic, and if I took some partials out, that would have offered me a really nice 3 to 1 there. So if I was live trading and I saw that, setup moved without me, even though I was ready to enter, and it didn't quite fill my criteria, I think I would have felt, disappointed, definitely, a bit gutted. So I'm trying to reflect on how I would feel if I was live trading and this happened to me when I was live trading. So I can just try and tune my emotions. And it's something that I've journaled as well, like I mentioned in my trade journal. So definitely going to see how this carries on, going forward, journaling and trying to control my emotions. I eventually just want to be in a position where I'm like a robot, essentially. Criteria, do technical analysis, uh, chart the setup, and then if it meets my criteria, enter. If not, do not enter and move on. Come back another day. So that's my aim, and I think everyone is actually working towards that as well. So yeah, I hope you enjoyed the review of that one as well. And just before I finish, I want to take you to the dollar index chart and just going to try and not predict, but think what kind of price action we may see next week. So what we've seen this week is that on the 23rd, price approached this previous high up here, this buy side liquidity area, and didn't quite tap into that buy side liquidity. So we've got relative equal highs here on the daily, and we've seen a swing high was created, and we saw price retrace back into this fair value gap on the daily, pretty much fill it, and we've seen a bullish reaction from this morning's price action. So what I think we will see is potentially a drive into taking out this buy side liquidity, up into this area, and as a result, we will see if that takes place, we will see a lot of bearish action on indexes, stocks, and major Forex pairs and crypto as well. So next week is going to be very, very interesting. Looking forward to seeing the price action actually, just to try and learn from this volatility as well. So yeah, let's see how next week goes. And thank you for watching. I hope you guys have a good weekend.